What is up, everybody? I hope you guys are having a good start to your week. How was everybody's extra day off today? Hold up. There we go. That's a little better. How was everybody's day off? I still think it's funny that I honestly did not know we had today off until like Sunday or Saturday afternoon, something like that. What's up, Brian, Nicole, Joseph, John, Michael? The truth is I know it. Good evening. We worked. Oh, my bad. My bad, Michael. It was a day off in the market, though. It was a day off in the market. But anyways, all right, well, we don't have any trades to go over because obviously the market was closed today. Oh, what's up, Kelly? What's up, Dave? Still worked. First time joining the Discord. Welcome in. Welcome in. Anybody that's not in the Discord should follow along with Shan Tan June. But anyways, guys, yeah, no trades to go over from today because obviously we couldn't take any. So we will go ahead and hop straight into the charting session here, which this is actually perfect timing here because we just opened up after hours here and a lot of the setups from the Sunday stock watch list are going to be changed. So definitely make sure you guys are paying attention. And yeah, at the end of the stream, we're going to go through, make the full watch list for tomorrow and possibly the rest of the week, depending on how these setups are looking or where we're at that point in time. So, wondering if you could explain options for me. Yeah, I can. We will do a Q&A after we get the charting done. So let's go ahead and go through the charts here. I'm going to go through my watch list from A to Z, see what we're looking at here. Let's see. So far, nothing on Apple, nothing on Airbnb, which is fine because we never have contract volume there anyways. Gap down pretty crazy here on AMD. Little unfortunate. Still have nothing to the downside on this personally, but yeah, we'll have to see how that sets up pre-market. It looks like we gapped down on pretty much everything, or we just absolutely tanked on everything. So yeah, right now, not seeing a whole lot here. ARM is coming down to a nice support from Wednesday, 102.01. This doesn't look bad. The only thing I would be skeptical with on ARM is the contract volume because the contract volume on this stock is not the greatest. So we'll go ahead and mark that for now, come back to it. If we have anything better, then it's probably going to get booted off the list there. AVGO coming down to a support from after hours on Thursday. I'm not the biggest fan of downside on this right now, but if that's all we've got on it, then that's fine. Once again, I have a feeling we're going to see way better looking setups once we get deeper into the watch list here. But as of right now, it's actually looking pretty empty. We don't have anything super crazy right this second. So coin, once again, gap down here. We really have nothing to trade to the downside on this. What's up, Tony? All right, Circle. Circle is one that I actually do have something on. I had this on the Sunday stock watch list. Obviously, we ended up breaking through that support level we were originally looking at. But down here at 73.90, 73.90 looks pretty good. We're gonna have to move a couple more dollars here to get down to that area by the time we'll actually be looking at it tomorrow morning, which I think is 100% possible. So Circle looks good. I like this. 73.90 support break to the downside. Like I said, we'll go ahead and go back and write out these full plans once we get through the watch list. But right now, not a ton going on. CRWV ended up actually breaking that wedge to the downside here. If we end up holding this area that we're currently at, I actually do like this support once again from after hours on Thursday at 94. We could line up at this really nicely here and have a beautiful setup for downside. So Hopefully they don't break this overnight, but yeah, 94 to the downside on CRWV looks nice. I probably wouldn't target much more than 92.50 because that is our previous resistance area that we ended up breaking out of. And we're probably going to see that end up holding as some form of support there. Not the good kind of support. The support that we need to be wary of. Let's see, DDOG, nothing. Disney probably broke, and yes, it did. Did we bounce off of 110 though? We did bounce off of 110. So Disney's still a possibility. If you watch the Sunday stock watch list, I had that in there, but Disney is not one that I trade too often because it just does not give us very many opportunities. So if we can end up seeing a nice setup at that 110 level, then something I'm willing to try for sure. Google tanked here. Looks like a lot of our setups are going to be very, very similar. We have no higher time frame levels here up until we get down to, what is this, 321.50. But honestly, if we end up bouncing and holding this low that we set, I kind of like 323 to the downside. So unfortunately, on days where the market is not open, we usually end up having a pretty major move once after hours does end up opening. And that kind of leaves us with not very many setups, which, like I said, a little unfortunate, but it is what it is. We can make do. Google is one of those that I would be completely okay with just taking the low from after hours if we end up holding. Meta ended up breaking. I'm actually kind of disappointed about that one. That should have been a very, very clean trade. SLV going for another all-time high. I don't have that on my watch list, Tony, but I'll check it out. Yeah, Meta ended up tanking. A little disappointing there. Because on that, I don't have anything on Meta for a while. Down to like 601. Let's see here. Microsoft. Nothing there for me. We do have a support here at 454. I'm going to go ahead and just get rid of all these because they are irrelevant at this point. So 454 on Microsoft, I do like. We're going to have to see some kind of setup leading into that level though. So just going straight down to 454, I would not be interested in this. But if we do, once again, hold this level that we ended up reaching after, after hours opened at 455, I would be completely cool with taking it there and playing that through that 454 level. So since I, can't predict the future, I'm just going to have to go based off of what I have right now. And I have a feeling that unfortunately a lot of these will be redundant by pre-market tomorrow morning. MSTR, I'm all good. MU, of course this thing has a massive bottom side wick. Of course it does. Why wouldn't we go for another all-time high? MU's all-time high actually doesn't look bad. If we consolidate between this 362 and 364 area, I would actually be interested in MU's all-time high. If we continue consolidating here and we can hold in this range, I just don't want us to open where we have to make pretty much a $6 move just to get to that level, because at that point will be a bit too extended for my liking in order to take that. NVIDIA, I have nothing. I know we have a support here, but it's leading into an area that is not very clean. So I'm all good on NVIDIA. Okay, hello, nothing. Oracle, nothing. PLTR, we broke. And we have nothing for quite a while here. Wow. Our little day off is not leaving us with much to work with tomorrow. I'm sure pre-market it's definitely going to be better. Pre-market it's going to be better for sure. But right now, there's just not a ton to even be looking at. This 4-hour support on snow actually doesn't look bad. Haven't actually looked at this thing in a while. But 204.18, I do like that level. if that setup was on any other stock, this would be my main watch for sure. So definitely going to be paying attention to it at least. I can't promise that it's going to get top priority, but it is definitely the best looking setup that we have out of all of these. Definitely the best looking. So right now, what do we have? We have ARM, which I'm not too confident in that stock having volume. We have AVGO, possibly. CRWV, or sorry, Circle, and then CRWV. We have 94. Okay, yeah, we've got an all right amount of stuff here. Let's go ahead and start making the watch list here. So starting off, I'm actually just going to go ahead and take ARM off of the list. I'm 99% sure this thing is not going to have the volume we need in order to trade it, so it's just going to make its way off the list right now rather than tomorrow morning. So what are we actually starting with? AVGO. So AVGO, looking at, let me move my face. Sorry if you guys hear a lot of background noise. For some reason, my dog just absolutely hates when I do these live streams. Like, in the morning, he's fine. Throughout the regular lessons, he's fine. And then the live stream, he's just like fully active. I don't understand. Let's see, AVGO, looking at the 341 10 support for a break to the downside. Targeting a move on this to the 340 break. Below this, we have room down to 339, 339.11 for my final target. Let me just check the trends here. So the trends, we're gonna have to break the 1 hour to get down there. 30-minute is redundant. 15-minute we have already broken. Okay, we have no trends that are really affecting this trade, so that's cool. Perfect. All right, moving on. What about SLV? CC, I will check out SLV. I will check that out as soon as I get done making this part of the watch list. Okay, yeah, sorry. CRCL. CRCL. So I'm going to be looking at 73.90. Looking at the 73.90 4-hour support for a break to the downside. On this, I actually have a bunch of room down on Circle, so I'm probably just going to target a move to the next psychological level here, which is 72. And below that, I'm just going to give it a momentum-based target. So targeting a move down to the 72 break. Below this, I will just be targeting momentum as my final target. We have room to fall, so I will not be limiting myself with an exact final target. There we go. All right, next up, CRWV. This thing is looking nice at 94. On the 4-hour, not so much, but on the 1 hour and below, this actually looks really good. So CRWV, looking at the 94 support from after hours on Thursday. For entry, we broke below the 1 hour rising wedge, and I will be looking for a sell-off on this. After the upside momentum we've been seeing over the past few days. Targeting a move down to the 92.50 previous resistance level. This should now be acting as a support. So if we see hesitant sellers I will be looking to exit my trade. Beautiful. Disney had an aggressive drop on the opening of after hours on Monday. Looking at the 110 low for a break to the downside. Targeting a move to, where are we targeting on this? Disney. So 110 is our entry level. We really have room on this all the way down to 108.55. So this is going to have to be a momentum based target once again. Let me see if we have any trends here. Nothing on the 1 hour, 30 minutes empty, 15 minutes empty, 5 minutes empty, 1 minute is broken. So, all right, we have room on this all the way down to 108.55. I'm not going to be holding for that long though. Room on this to the 108.55 support on the 4 hour. I will be basing my target off of the momentum we see on the sell-off. Overall, I will be watching for a nice one-to-one stop loss as well. Our current levels are too far away to base any targets. There we go. Current levels really are too far away to base any real targets off of, because 108.55, we're talking about $1.45 move on Disney, and that is a massive, massive move for this stock. So I'm not expecting to see a move all the way down to 108.55. I'm just saying in the meantime, between where we are right now and when we get there, that's a big gap. We've got a lot of room down. We have nothing in between that area. So in that area, we're just going to have to be on our toes. We're going to have to be reading price action like we should be in every single trade, but we're really just going to have to be basing that whole trade off of momentum other than the entry, obviously. So ideal target for me on that, I would like to see the 108 break. I'm sorry, not the 108 break, the 109 break. I would like to see the 109 break, but I don't know how realistic that is, because some days Disney can be a very aggressive mover, and then some days Disney can be normal and just a complete grind to wherever its final destination is. So that is a little unfortunate, but it is what it is. Let's see, Meta. What did I say? I was looking at 610.02 was that level I had on Meta. I've got room on Meta all the way down to 601.42. So let me just mark that out real quick. 601.42. Ooh, there we go. 601.42. And then the low from this drop was 605.45. So yeah, that's actually a pretty realistic move. We can actually have a better target, or a more confident target on Meta than we could on Disney. So Meta, looking at the after hours low at 605.45 for entry. Playing this through the 605 break. Below this, I have room down to the 601.42 level for my final target. Beautiful. All right. Next up, Microsoft. Microsoft at 454. This was from the 4 hour. Okay. So Microsoft, looking at the 454 4 hour support. for a break to the downside. Imagine that. We've got room on this for quite a while, actually. We've got room to all the way below 450 on this. So once again, as of right now, we're going to have to be just assuming that these targets are going to be momentum based, because anything other than that, we don't have any exact answers for yet. Now, by the morning, the trends are going to change. Our levels are probably going to change. So just keep that in mind. These are not the absolute finalized results and the absolute finalized trade plans, but it's just a good baseline, at least, for us to get our heads wrapped around here. So looking at the 454 4-hour support for a break to the downside, targeting a move on this to the next psychological level at 453. Below this, we have room all the way to the 450 break. So I will be basing my final target off of momentum. All right, next up, MU. MU, we actually... This stock, bro, this stock is driving me crazy. Every time I look at it, it's at a new all-time high. All right, so MU's off the list. MU's off the list for now. Doesn't mean it won't work its way back on in the morning somehow. I'm sure it probably will. But this thing is just insane. This thing is nuts. I could have just gambled on MU calls 2 weeks ago and just called it good. That's insane. We've seen what, we've seen new all-time high breaks almost every day, except for what, 1, 2, 3 days. 3 days we have not seen a new all-time high break on MU since December 18th. So literally a month straight. We've had 3 days that we've not broken a new all-time high. That's absolutely nuts. It's actually nuts. All right, snow. Looking at the 204.18 support for a break. Can you guys guess which direction we're playing this to? Break to the downside. We are forming an H pattern here on the 4-hour time frame. Overall, this setup is high quality. We just need to be aware of contract volume / spreads. So target for this snow trade. What's up, Seth? Target for this snow trade. We've got a gap here as well. 202.54. That's actually probably a perfect target for this. Yeah, that's a perfect target for this. We have a gap to the downside on the 1 year. We have a gap to the downside on the 1 year. That gives us room to 202.54, which will be my final target for this trade. Boom. All right, and then Tesla, did we have anything? Let's see, Tesla, we're probably going to be looking at that 430 level for a scalp as well, if I had to guess. And at that point, I mean, obviously, when we're looking at all these stocks, that does not mean I'm looking to take a trade on Snow, Microsoft, Meta, Disney, CRWV, Circle, and AVGO all tomorrow. But obviously, we create our list of setups. We find which ones we like best, and those are the ones that we execute on. So right now, it's still... I know we have this whole watch list made out, but I'm just being brutally honest with you guys. It is still completely up in the air on how we're going to look tomorrow morning. That's why I don't like these days off in the market. Like, don't get me wrong, a day off is cool and nice and all, whatever. But days off in the market really throw off our planning, because then we just have reactions like this when the market finally opens after hours. And it's like, all right, cool. But what are we actually looking at now is the thing. Like, we've got all right setups here. Snow is my favorite setup out of all these. The only part that I don't like about it is the fact that the stock is snow. So the setup is the best by far. The stock is just not the greatest. So that's what I'm looking at, though, as far as tomorrow goes. I'm confident that we're going to see a way different looking set of charts in pre-market than we are right now. But let's say these do hold, then that's perfect. That makes it easier for us because we already have our plans made. But anyways, guys, for those of you that are not in the floor, by the way, just real quick, screenshot this, save it, use it, do what you got to do with it. Not financial advice, obviously. This is just my interpretation of what's going on in the market right now. But also, if you would like to join the floor to trade with me and the team, click that first link in the description. Check it out. And we have a ridiculous deal going on right now. So if you don't take advantage of it, you're actually insane. But anyways, guys, so we've got about 30 minutes here for the rest of the stream. So if you want to turn this into a Q&A session, I'm happy to answer all of your questions. So anybody that's new to trading, anybody that's new to the chat, anything like that, if you have questions, feel free to ask them. I'll give you guys a second here without my face on the screen so you guys can actually screenshot this. And you'll have time to think of your questions. All right, that should have been plenty of time to screenshot. Anyways, first question here. What is an option? All right, Seth, I'm assuming your question is actually a joke, but there is somebody in here that asked me to explain options earlier anyways, so I will go ahead and just give you the actual answer to that. So an option is a contract that basically gives you the right to purchase or sell 100 shares of the respective stock at whatever price you purchase that contract at. So let's say right now on snow, well, that's probably not a good example actually. Right now on Tesla, okay, let's say you bought 425 calls on Tesla, all right, and you wanted to buy 100 shares of Tesla. You're paying that premium price for the options contract, which currently is $1,600. You're paying that premium price for these 425 calls, and then you have the right, but not the obligation, to purchase 100 shares of Tesla at $425 per share, even though Tesla is currently at $432 per share. So that is what an options contract is. That also works on the other side with puts as well. Let's say we bought the 435 puts. That gives us the right to short 100 shares of Tesla at $435 a share, even though we're at $432 right now. But that's not how we actually trade the options. The way that we are trading, we actually really aren't even trading the stock necessarily. We're trading the premium price of the options. So the premium price will move in coordination with how the stock moves. Calls will gain value as the stock goes up. Puts will gain value as the stock goes down. So if we're looking at a downside trade, that means we're going to be looking at put contracts. The reason for that is because, once again, the puts will gain value as the stock decreases in price. And that should make sense given the information that I just told you. The more the stock goes down past your strike price, obviously the higher that premium price is going to get because those contracts are more valuable. You're able to... You good? All right. You're able to short 100 shares of Tesla. Let's say you bought these 435 puts and we're already down here at 420, right? Your shares, you're going to be up over $15 a share on your position if you actually exercise those contracts. So obviously those contracts are going to gain value as the stock is moving down. So yeah, when we are trading, we are not actually trading the stock itself. We are trading the premium price of the contracts. And the easiest way to describe that to anybody that's traded stocks or penny stocks or whatever, anything that you've traded, you're typically buying shares, right? So I started out trading penny stocks, and to trade those penny stocks, you're trading shares of that stock. That's how you actually trade a stock itself. But the easiest way to describe it is essentially we are trading the options contracts as if they are shares of the stock. We're in and out of these contracts. We're not actually looking to exercise these contracts. We're just looking to capitalize on the movement of the premium price. So Seth, I hope that answered your question. And also Tassine, I hope that answered your question as well. If you have any more questions about that, feel free to ask. Do you keep a strict stop loss on your contracts? If so, what would it be? Or if it varies from trade to trade? If so, what would you say your max percent stop on the contract would be? I hate percentage stop losses. Percentage stop losses don't work. They will for a very short period of time, and then you're going to end up getting smacked over and over and over again. So no, I do not keep a strict stop loss percentage-wise on my contracts, because your contracts on a Monday are going to move way different than your contracts on a Friday are. And a lot of people like to say, oh, I keep a 10% stop loss. That's not true. You might say you do, but you don't follow it. And if you do follow it, you're going to get smoked. So if you're making a stop loss and then you proceed to not follow it, that's also going to get you smoked in the long run, because all you're doing is training yourself to break your rules. That's literally all it is. You're training yourself to break your rules. So that's why I say percentage stop losses are garbage, complete garbage. The way that I actually base my stop loss, it's off of a risk to reward standpoint. So the minimum risk to reward that I'm looking for in a trade is 1-to-1. And once again, people like to say, I'm looking for 1 to 3 bare minimum. Congratulations, you're not going to find very many setups. All right, but a bare minimum 1-to-1 does not mean that we are actually only looking for 1-to-1. But the lowest risk to reward that it can be is 1-to-1. Now, that means you're risking $1 to make $1. I don't care if you're basing it off of the contract price, if you're basing it off the price of the stock, it really doesn't matter. But the way that I calculate it is based off the price of the stock. So let's say I have a minimum target of $1.50 and I have a stop loss that can be somewhere in the range of $1.50. Okay, I'm actually just going to draw this out for you, and I'm going to change those numbers to $1 just so it's even easier for you guys to understand here. So let me just draw this out for you guys. So we have a stock that's doing something like this, okay? We are looking at an entry level at this blue line right here. This blue line is going to be our entry level. I don't like that color of blue. I'm changing it. My bad. Our entry line is going to be this blue level right here, okay? Now let's say our minimum target down here, our minimum target is $1 move, okay? And this is based off of, once again, levels on the stock, not just saying $1 just for the sake of it. All right, so we have between entry and bare minimum target on this trade, this right here is $1, okay? $1, boom. That means that our maximum stop loss can also only be $1. So let's draw this up here. All right, here's our same dollar. So our maximum stop loss can be right here in order for this trade to make sense. So we are risking $1 to make $1 bare minimum. Okay? Now, what happens when we actually have a level on the stock? Well, that's what I'm looking for before I actually take a trade. So sometimes I won't have a super specific stop loss in mind other than a bare minimum 1-to-1 risk to reward up until I'm actually about to enter that trade. So if I see something on the stock, okay, what is this right here? Oh, look at that. It's a resistance. What happens when we move aggressively into resistances? Feel free to answer, because the answer should not be confusing. What happens when we get an aggressive move into a resistance? There should be plenty of people in here that can answer that question because we do it on a daily basis. Nobody, not one person knows what happens when we aggressively move into a resistance level. No. And let me draw this out differently here. There you go, Ray. Good job. Ray, Tony, there we go. All right. When we aggressively move into a resistance level, we get a breakout. That's what we're looking at literally every day. We're looking at breakout trades, okay? So why would you be under any different impression to think that if we get an aggressive move into a resistance level, we're most likely going to break out? It's the same thing. Now, it might not be a setup that we would trade because it's not high probability, but when we get an aggressive move into a resistance level, that gives us a breakout. So where am I looking at here? All right, if I have this level right here, boom, easy. That level right there is where our stock is probably not going to end up seeing the move that we want to see. Now, it may still end up coming back down, but it's most likely not going to be without some type of big reaction here. All right, we might break out and we might come back, but we don't want to hold through this big of a move because at that point, our risk to reward is no longer that bare minimum of 1-to-1. So what did I just do? I found a level here that cut my risk in half. So now, even though originally, remember, originally when I was looking at this, I was looking for a bare minimum 1-to-1. Now, since I cut my risk in half here, now instead of risking $1, I'm risking 50 cents, okay, to make that same dollar. So now my risk to reward is 1-to-2. And once again, keep in mind that this target right here, this was our bare minimum first target. And we have targets underneath these levels. So let's say we have another dollar move here to our next target and another 50 cents here to our final target. Now we are risking 50 cents in order to make $1, $2.50 back. Okay, so now our risk to reward went from bare minimum of 1-to-1 to 1, 2, 2, 4, 5. Look at that. See how that works? Is that making sense to everybody? So like I said, once again, our first original thing that we were talking about the bare minimum 1-to-1, which actually ended up turning into a 1-to-5 by the time that setup was fully formed. And with these stop losses, you're not going to not follow your stop loss. Like, that's the whole point. Have stop losses that you can actually follow. If you try and stick to something like a 10% stop loss, you're never going to follow it. And like I said, if you do, you're getting cooked. You're getting cooked one way or another because you're either going to stop following it at some point because you realize you get stopped out on every single move, no matter how slight it is. On a Friday, on a Thursday, you're getting stopped out within a matter of cents. Okay? Stopped out within a matter of cents. Keep that in mind. You're going to have to basically have every single trade hit target the moment you enter, or you're going to get stopped out every time. Okay? So once again, you're going to get cooked either on getting stopped out over and over and over and over again, or you're going to get cooked because you're not following your stop loss at all because you've realized that you get stopped out every time you enter a trade. Either way, it's building bad habits. How would you size up? Let's say you don't want to lose more than 300 a day. I'm so glad you asked that because that's what I was about to talk about next. So when we're talking about a bare minimum 1-to-1 risk to reward, all right, we are going to look at, now, if you've been trading for a while, you're going to be able to do this easier than if you have not. But let's say Tesla on a Friday. I'm just going to use this as an example because I use this as an example every time. If we're talking about Tesla on a Friday, we know that within $1 move on Tesla on a Friday, that actually is going to end up being right around 20%. Okay? So 20%. That's how much you know you're going to be risking percentage-wise on your contracts, or relatively close to that. Okay? So if you're not comfortable with losing more than $300, take that $300, all right? 300. We're going to just go ahead and divide this by 2 so we can make the number even easier to calculate here. 300 divided by 2. All right, 150. Boom. All right, we have our 150 right here. That's for a 10% stop loss at the same position sizing. All right, now to find your position sizing, the most you can go in with on this trade is $1,500. All right, either way you calculate that, it's going to work. So maximum position size for you on this is $1,500. If you know that you're going to be risking about 20% and the most you're willing to lose is $300, your max position size is $1,500. So you're sizing based off of your risk, all right? And even though we are looking at this bare minimum 1-to-1 risk to reward thing, we are still actually able to calculate our risk based off of how much money we are willing to lose on that setup. How much money am I willing to risk on that? 300, if I know the contracts are going to move about 20% in this stop loss area, that means my max position size is $1,500. Okay? Does that part make sense? I know once I start adding in like real math into this, I lose like 60% of the audience. But it's not difficult math. It's just math that you're going to have to get used to. You really don't have to do hardly any math at all when it comes to trading. Just basic addition, subtraction, division. That's really about it. Makes sense. Would you calculate delta to calculate your risk? You are a smart cookie, my friend, because that's exactly what I was about to say as well. If you don't just have the intuition of knowing roughly how much these contracts are going to move because you've been trading for so long, then yes, use the delta. Use the delta to actually calculate that number out. Now, you're not going to have to do that for very long, and you're probably not going to want to do that for very long because, like I said, once you just have the experience in the market and you've been trading for a little bit, these numbers, you're going to know roughly how much the stock is going to move anyways, whatever stock it is that you're trading. If you're familiar with the stock, if you're familiar with trading it, you'll know roughly how much contracts move on any given day anyways. And we're always trading the contracts that are the same strike out. So it's not like on one of these stocks, we're trading contracts that are 40 strikes out of the money, and then the next day we're trading at the money contracts. We're pretty much always trading the same contracts. They're going to be pretty much the same price on the same days every single week. So that's something that you just get used to, and you know, like I said, on a Friday, Tesla contracts are probably going to move about 20% on a $1 move. Now, once again, you can calculate that out using delta. That is going to take a little bit of time compared to just having a rough estimate in your head, right? But it's going to get you the same results. Okay. And another thing that I do when I am doing these calculations in my head for my position sizing is I know that my number is not always going to be exact. Okay. I know that 20% number is not always going to be exact. And if you're doing anything in your head, it is never going to be exact when it comes to just quick math like that to determine your position sizing. So I will always overestimate what I am expecting to lose than underestimate. So if you're going to do it in your head, overestimate your stop loss rather than underestimating, because at that point, you're never going to lose more than you're expecting to. See what I'm saying? Like personally, I could go in and calculate out the delta if I really wanted to, but I don't want to. That's just extra time that I'm losing in a small calculation that I know in my head I'm gonna be probably anywhere between like 1 to 3% off of the actual number anyways. So I'm just gonna overestimate that number. And if I think that, let's say I think that the contracts are gonna move around 15%, I'll probably up it to like 17 or 20 in my head. So that way I'm never accidentally in with more than I want to be. Correct, Shin. I don't know how to say your name, but yes, that is correct. My stop loss is always going to be based off of the chart and the levels, and the risk to reward, because sometimes we don't get levels like this. Sometimes we do just come straight down to this entry level and we won't have anything to base our stop loss off of. If that's the case, then what do? I just stick to my 1-to-1, and that's just fine. All right, obviously we prefer a bit more information that helps us out a little bit more, but it's not always going to be the case. So sometimes we won't have that extra level that I was referring to, and we will only have our risk to reward. So either way, if I have an entry level and I have a target in mind for my bare minimum target, which those are really the two things that I need to make a solid plan, I don't necessarily consider something a full solid plan unless I have an entry level and a bare minimum target. But if I have those two things, which I always do by the time that I enter a trade, I already know where my stop loss is going to be. It's either going to be based off of a level that I saw on the chart that actually gives me a better risk to reward, or it's just going to be based off of that 1-to-1 risk to reward. It's super easy. It's really honestly the easiest way to calculate your risk, and I don't know why more people don't do it. It kind of raises more questions to me than just that, but that's a completely different time and place story there, I guess. But yeah, that is how I calculate my risk. And it is not as complicated as people make it out to be. Keep the target at least 15% gain for the 1-to-1 result. No, I don't have a specific percentage in mind when I'm looking for my targets either. Once again, my targets are all based off of levels as well. My targets are not percentage based. Will you consider wick or body close for support or resistance area? The wick, always the wick. When you're looking for entry levels, it's always from the wick. Now I will mark out areas that we have previously wicked from, which you technically should be drawing those as zones anyways. But like there'll be some times where, let's say these wicks right here a bit more aggressive than they really are currently. I will sometimes mark out the body of the candle just so I know, like, hey, below this area, we have had a lot of major downside wicks, so I need to watch out below here. And I might keep that as a target, but that is not a level that I would use for entry. The entries are all marked from the wicks. Oh, sorry. My bad, Shin. All good. So if your stop from entry is hold on. Your stop from entry is 1.5, then you know you lose 15%. $1.50. You'll cite it. Yes, you're correct, Chan. All right, guys, do we have any more questions here? Thank you, Sasi. Thank you. Once again, anybody that's not in there, if you guys want to join up, click that first link in the description. Click that first link in the description. I don't know, how many of you guys in here are in the floor right now? How would you size up if you don't want to lose more than 300 a day? How would I size up? I wouldn't. If you know your max stop loss comfortability, then you can't really size up more than that. You're asking a question there that is all best case scenarios, and that's not the way to look at trading. The way to look at trading, if you're going to stay in the markets for the long run, you have to look at everything from a worst case scenario perspective. So pretend every single trade that you're entering, you're hitting your stop loss. You're not hitting your target. You got to think about the stop. You got to think about the risk. You don't have to think about the target or the reward. The only part that you really need to be focused on, other than obviously the price action itself, you need to be focused on worst case scenario, because that's how people end up blowing their accounts. They think about best case scenario all the time, and they're never prepared for when the market actually hits them. So you wouldn't know how to size up. Well, Shan, the more you start making, those numbers are just going to grow over time. They're going to grow. I mean, your stop losses are going to have to grow with your profits as well. You see what I'm saying? So like my stop losses did not used to be around 1,500 to 2K, but now they are. But I can't expect to risk what I was risking when I was trading with $2,000 to $3,000 position sizes when I'm trading with $10,000 to $15,000 position sizes. See what I'm saying? Like, you can't expect to keep that same risk and also up the reward by that much. So your question there, if we take away part of it, how would you size up? Well, you would size up very slowly is how you would size up. You would size up only when it feels natural, because when you size up, you're not only are your profits getting bigger, your losses are going to get bigger as well, and you have to be prepared for that, and you have to be ready for that. So your question there, it makes itself a little bit redundant, because if you can't, you're not going to be sizing up if you're not willing to risk any more than you currently are. Does that make sense? Also, I mean, there's other opportunities in the market that are going to give you bigger rewards than just a one-to-one, right? And when we see that, and like I said, in that scenario that we just talked about where we chopped our risk in half, if you want to risk the same dollar amount, that's great. That means you can double your position size. You're risking the same dollar amount, but you're doubling your position size and you're doubling your reward. So you can look at that from two perspectives, right? If we just chopped our risk in half from a 1-to-1 to a 1-to-2 bare minimum now, that means our original sizing for that 1-to-1 trade that we planned was 1,500 because you were willing to lose 300. But since we chopped that in half, that means you could either double your position size and risk the same dollar amount, or you're only risking half of what you were before. So that would be another way to size up. Without risking more than $300. Now, that's not going to be an opportunity that's presented to you on every single trade, but on the trades that it is, sure, take advantage of it. I'm not sure if Shan already left the stream or not, but hopefully that makes sense. Oh, SLV, my bad, guys. Yes, got it. Can you please answer that? Do you do opening drives? If so, no. No, I do not. I don't know exactly what you mean by opening drive. The only time I will take a trade off of open is if it's at a level that I'm already planning to trade. And in that scenario, I'm calculating my risk the same exact way. All right, guys, you guys really in the past couple of weeks really wanted me to look at SLV. Now, the thing with SLV is I would not treat this any differently than I would treat something like SPY or QQQ because I'm fairly confident that it does not move the way that our typical stocks move, which means the breakouts are not going to be as clean or have as clean of follow through. So, main reason I'm not looking at this and why I'm not adding it to the watch list is because I would not expect it to move any different than something like SPY or QQQ. I'm also not familiar enough with this specific stock itself to really want to throw it on the watch list. So it's something that I would actually have to watch before I would create a whole plan around it, because I'm 99.9% sure that this moves kind of like SPY and QQQ and does not have the cleanest breakouts. No problem, Shane. So yeah, it's cool. It looks good and all. The setup looks cool, but I don't think it moves the way that we need it to. So that automatically just takes it off the radar for me. Like the first candle that is right at the all-time high, let's say on MU or Tesla. Not exactly sure what you mean by that, Shan. Oh, you're saying like an opening drive. Yeah, I mean, I'm not taking any trade unless I have a level there. I'm not taking a trade just to take a trade. So either way you put that, the planning is still exactly the same. Nothing changes. Yeah, no, nothing changes. Even if it's an all-time high, I don't care if it's a first minute play. It's still the level that I was looking at, and it's still the trade that I was planning. It doesn't really matter when it happens. Just know it has volume. Yeah, Tony, I see that it has good contract volume, and I see that it has good volume overall, but it seems to me that it would move like SPY and QQQ. AKA, I wouldn't really trust breakouts on it. Like, let's see here. When was the last opportunity you actually even had to take a breakout on this? Would have been right here, like 83.65. Let's see how well this broke out. Okay, we actually did have a nice little breakout there. That's cool. Now before that, when would be the last opportunity? Let's see, what date was this? 1/6/26. Where is this? Oh, daily. I don't know why I was just blanking out on this. Okay, 1/6/26. Okay, so we wouldn't have even, yeah. That's okay. Yeah, that still doesn't necessarily solidify enough for me to be really looking at that. I'll watch it. I'll keep an eye on it tomorrow just to see how it's moving, but like I said, I believe that this moves very similar to SPY and QQQ. Got it, like red to green or green to red first candle. Yeah, the red to green and the green to red, that's something that we look at, but that's not our only reasoning for entering a trade. Like that's what I'm getting at. The reasoning for entering a trade is never going to be just because of one thing without an actual level. So yeah, we might enter on a red to green, but it's a red to green that is into our level, or a green to red that is into our level. And honestly, I try to avoid the first minute anyways, if I can, just because the price action is so volatile. But once again, you're still calculating everything the exact same way. Nothing changes. The more you try and overcomplicate it in your head, the harder it's going to get. And the actual thing is not getting any harder. You're just making it harder in your head. So don't try and overcomplicate the process there. It's the exact same no matter what I'm doing, because I'm not taking a trade if I don't have a level. And if I have a level, then that means I have the plan already. No, that's not true, Shan. If I don't have the specific level for my stop, we still stay at the same 1-to-1 risk to reward. That's how it goes. If I don't have the level for my stop, we're still looking at the same 1-to-1 risk to reward. Remember, because our worst case scenario is that we actually hit that 1-to-1. Right? Worst case scenario is if we hit that 1-to-1 risk to reward stop loss. It only gets better from there. So that's what we plan for. We plan for worst case scenario. Most of the time we get something better than that, but we plan for worst case. So see, Shan is saying an opening drive play, like if we just try and take a momentum play off of open. That's not something that we really do. But no, I mean, when you get down to it, regardless of how you put it, regardless of what time of day you're talking about, we're not entering a trade unless we have a stop loss. If you don't have a level for your stop and it's all-time highs and there's no target to the upside, when would you consider stopping out on your contracts? No, you're good, Shan. I appreciate the questions. So at an all-time high trade, I still typically have a target in mind. The targets that I'm looking for on an all-time high play is typically just the next psychological level. So let's pretend we were looking at MU before it ended up breaking. Okay. If I was looking at MU, my target for MU would be 367 break, which we should be able to see. And then above that, it would be 368, since there's nothing for us to target. So my minimum target on this MU trade, I wouldn't be looking to really get out anywhere before 367. And if I was getting out anywhere before 367, that means that we had an opening move that pushed us, or not an opening move necessarily, but that would mean that we had a move that pushed us there with absolutely zero drawdown. That's the only scenario where I would be getting out any sooner than 367 on MU. Okay? So at that point, we really don't even have to worry about the other side of that because we had no drawdown on that trade. So, you know, it is what it is. But bare minimum target for this, for me, would be the next psychological level here, which is 367. So once again, we still have our plan ahead of us. I'm not taking a trade unless I have an entry and an exit plan. So like no matter what question, or no matter how you question the stop loss, it's the same answer. I'm not taking a trade unless I don't have an exit plan. And even when I'm targeting momentum and I don't have a specific level, I still have a target level in mind. And it's typically just a psychological level. Okay, so like even here, I don't think we have anything in the watch list that is only momentum based. We might have something that is mainly momentum based. Disney is the only thing that is momentum based. But still on this, if I'm taking Disney, I know that I'm really not going to be looking to get out anywhere before 109. Maybe 109.50 I would look to scale out of half, just because a dollar move for Disney is quite a bit. So once again on this, even though I don't have that specific level, 109.50 is probably going to be my bare minimum target that I would scale out at, which means that my maximum stop loss is 50 cents. Okay, so right now I don't have an actual target level for that, but everything else on here, even if it's mainly momentum based, I still have a target level in mind. So once again, not entering a trade unless I have an exit plan. And it ends up being the same no matter how you put it, whether it's an all-time high, whether it's an opening drive, whether it's an all-time low, it doesn't really matter. It's all the same. No problem, Dave. No problem, Shane. Once again, I appreciate the questions. I do appreciate them. All right. Do we have any last minute questions here before we wrap it up? So your target and stop when you plan a trade is always 1-to-1, and from there on it could turn into 1-2, 1-3. Yes, exactly. When I'm planning the trade, it is always based off of a 1-to-1 bare minimum. That doesn't mean that it can't be more. Most of the time it is, but we want to think about things in a worst case scenario perspective, because then we're always prepared for what's about to happen. If we're thinking and we're doing the guru route of saying, oh, I don't look at anything unless it's 1-to-4. Great. That's not true. Fantastic. But yeah, that's just, it started off at worst case scenario, improve from there. We're never going to be left somewhere that we have not already been prepared for. No problem, Shan. How do you choose the option contract you want to buy? So the options contracts that I'm looking at, they're always going to be the contracts that have the best volume, that are relatively close to being in the money. So whether those are at the money contracts, which means they are literally one step out, or whether they are a couple strikes off, just depending on which contracts have best volume, that's what I'm going to be looking at for my options. So I also am typically only looking at the $5 increments in the options contracts on most of the stocks we trade, unless it's something like Hood where they have every dollar increment. Hood, we have every dollar increment. But on something like Tesla, it goes in $2.50 increments. I'm always looking at the $5 increments, unless it's a Friday and the contracts are too cheap to the point where I would have to play one of the 250 increments. But otherwise, I would be either looking at the 430s, the 435s, the 440s, the 445s, the 450s. I wouldn't be looking at these $2.50 increments. Reason for that is because the $5 increments almost always have better volume. It also has to do with what is a comfortable pricing for you. Like personally, my sweet spot for options contracts is when they are priced anywhere between $3 to, I'll say $8. Really $3 to $7. $3 to $8 though is fine. Anything below $3, I'm not a massive fan of trading it unless that stock's contracts are just always cheap. But I will not, can't say will not ever, but I typically will not trade any contracts that are lower than $1. So if you have your sweet spot as well that you can stick to, and don't make it a ridiculously low sweet spot, because on a Friday you're going to be like, oh cool, these contracts are 2 cents, let me buy 500 of them. That's definitely not good for you and definitely not good for your account. But let's have a realistic range of like the 3 to 5 area, or the 3 to 8 area like I'm talking about here. I typically don't like trading contracts if they are over the 1,000 mark, and I don't really like trading them if they're under the 100 mark. I don't know why, that's just what I prefer. So if there's contracts, and let's say it's on a Monday, I might end up going to the 450 calls instead of playing the 440s, right? Or I might end up going down to the 420 puts instead of playing the 430s or the 425s, just depending on what they're priced at on a Monday. Because on something like Tesla, all these contracts have volume. We're going to be good on the volume regardless of what we pick. But on like Friday, we need to be playing at the money contracts. If you start going super far out of the money on Friday, you're getting smoked by everything. Any pullback is going to absolutely destroy your position if you're playing super far out the money on Fridays. Can I get your thoughts on NQ after the gap down? I'm hoping Nikita hops on because I think we might get a nice play. My thoughts on NQ. I'm not going to be able to give you as much insight as Nikita there, but I mean, honestly, I have no thoughts on this, to be honest. I really do have no thoughts. I mean, right now it looks like we're trying to recover. That doesn't really mean anything, but yeah, man. Sorry I can't give you a much better answer than that on this one, but I'm just being honest with you and telling you that I really don't have any thoughts on this at all. Mentioned about a new strategy, exploring but not signaling or anything. I have signaled them, Justin. I've signaled them on Meta and on Tesla. They were both over 40%. Or well, Tesla was 38, Meta was over 40. We took one on MSTR as well that was like 28. So yeah, I have been signaling it. I just haven't talked about it much. And honestly, I don't gatekeep. I never gatekeep anything. I'm not gatekeeping this for any reason other than I want more testing. Yeah, Justin, that's probably because I don't think you were signed up. I don't believe you were signed up, which would mean that WAP is going to lock you out. But yeah, no, I'm gatekeeping this for now because I don't have all the data that I want on it yet. And I'm not going to teach something that I'm not 1,000,000% confident in. So, oh, okay. Well, then, Justin, I guess I don't really know what to tell you there. What are your thoughts on Monday and Wednesday expirations that are approved and going to start on January 26th for some stocks like Tesla and NVIDIA? I don't know, Shan. I don't have thoughts on that yet. I don't have enough information to have thoughts. Justin, you should have said something. I would have got that fixed. Yeah, though, Shan, I really don't have. You did? When? I'm not seeing anything here from you, Justin. December 26th. He has receipts and everything. I have no requests from you, and I have no messages from you either. So I don't know when that would have been. And I know that I'm further back than December 26th in direct messages. Wait, what? I'm so confused. Oh, hey, look at that. I just got a message from you. Wow. Oh, oh. Okay. Let's see. Yeah, I'll take a look at that then. I'm not sure exactly what the problem was there. All right, anyways, back up here. What was the last thing here? Signed up over the weekend, excited for the floor. What time is pre-market? 9 a.m. Eastern every single day, Shan. 9 a.m. Be there. Yeah, Justin, but I want to see what that was. I'll fix it for you. Yeah, welcome in, by the way. But yeah, pre-market review at 9 a.m. Eastern, guys and girls. Hope you all have a great rest of your night. Thank you guys for all sticking around. I will talk to you